McDonald.
Thank you very much. Thank you. Right. Well, I don't need to tell you what my presentation is about. I'd like to start by just giving you a little bit of a background on me. I grew up in New Zealand, thus the accent. I did a degree in computer science, and so my background's in the technology industry. I moved to the UK in 1992, and I ended up getting a job in the technology industry here, working for British Telecom. And so I worked in a number of international roles at BT. I ended up running a business unit with about 50 people working for me. We had about £1 billion in revenues. It was quite a big concern for BT. And so BT ended up putting me through an MBA at a Swiss business school called IMD. And actually that process of going through that MBA program really caused me to reevaluate what it was that I wanted to do in a very general sense, but also what I was good at. And so I think that having completed that MBA program, it was quite a pivotal point in my life where I realised that actually, although I could swim in that and live in that corporate lifestyle, what really worked for me was being in an entrepreneurial environment where I could exercise my own, I guess, creativity, and where I had a lot more independence. I guess you could say I'm a very independent-minded person. And so at that point, I already had some involvement and experience in property development. I did what you could effectively call a joint venture with somebody who was a property developer in New Zealand, a friend of mine, a guy called Mike Woodward. He did the property development stuff. I actually helped with backing him. I put some money into those projects and I helped with the financial backing for them. And so I guess you could say that was a joint venture. We didn't really think of it as such. But it was my first experience in property development, and he, to a large extent, I think it inspired me to start doing what I now do as a property developer. So I bought my first house in the UK in 1994, and I went on to buy and refurbish a number of flats and houses in London. I left BT in 2001, and I guess I jumped out of BT because having completed the MBA program, I couldn't find a role in BT that allowed me to be entrepreneurial, that allowed me to do the things that I'd learned on the MBA program. So around about that time, I bought this place. It's an old Grade 2 listed former hunting lodge in Gloucestershire. I worked for a technology startup for about a year. I got out of that with a little bit of money. At that point, I had to make a decision. Do I go back into corporate life, or do I actually follow my nose or follow what my instinct was telling me and do my own thing, start my own company? And at that point, I made the decision to start Melt Homes. So I founded Melt Homes in 2002. And in the last 17 years, we've built over 100 properties in London, Gloucestershire and Kent with end values of over £22 million. These are a couple of the projects that we've built, and I'll talk a little bit more about some of the projects that I've done on the way through the building of Melt Homes as a company. But this one in particular is a property that I'm particularly proud of. It's the penthouse in a development that we completed in 2013, which was the conversion of the Lock Warehouse in Gloucester Docks. That's a Victorian former grain warehouse that we converted into 26 flats with 3,000 square feet of commercial space on the ground floor. And this property, the Lock Penthouse, actually achieved the highest price ever achieved for a flat sold in Gloucester Docks. And so really what that I guess is a demonstration of is one of the philosophies that we use for development, which is called design-led development. And I'll talk a little bit more about that later in the presentation. So we've also built over this time a portfolio of investment properties, around 50 commercial and residential properties. And that, to a large extent, is about diversification. It's so that we're not reliant on the ups and downs of the property development market. We all know that the property market booms and busts, and so I guess that investment property portfolio was built up with that in mind, so that when there were periods, and we knew that there would be periods during which we couldn't do property development, so that we had another business that we could rely on, and also a business that smoothed out the cash flow in between property developments, because property development is a cash-intensive business. We're currently working on 4 projects with end values of around £60 million, and I'll talk a bit more about some of those projects as we go through this presentation. And in fact, what I'm aiming to do with this presentation is to deliver as much value to you as I possibly can. And I think one of the ways that is most engaging for people is to actually talk about live examples of development projects that we're doing and the approach that we've taken to those development projects. And hopefully that'll give you some insight into some of the methods that you can use if you're engaged in development to maximise the values of the projects that you're doing and maximise the value of the properties that you create. So we've raised over £3 million in equity for our current projects. Around £2 million of that has been crowdfunded. The rest is money that's come in from a private equity investor that we're working with on one of our projects. And we plan to raise a further £5 million in the next 6 months. Just a little bit about me. I do a lot of work on, and I guess presenting at events is part of it, on making sure that I've got a strong personal brand. And so one of the things that I'm doing is I'm writing a book. The book's called Getting It Up. It's about how to build things. Don't be under any false impressions. What I talk about in that book are the methods or the algorithms that we use to deliver profitable property development projects. And I'll be touching on some of those tonight, but what the book will be about is that subject in a lot more detail. I talk about a philosophy we have called rigorous risk management, which is about how we de-risk projects before we even purchase the project. And then design-led development, which is about how we use design to enhance the values of the properties that we develop. And I guess we combine those two things, the rigorous risk management and design-led development, to enhance the values of the properties that we develop before we even start work on site. And I'll be talking about a couple of examples in my presentation tonight about how we do that or how we've done that with our current projects, aiming to launch the book by the end of 2019. As Ed said, I also appear on Property TV. I do my own vlog, a vlog called The Main Thing, and I do a program called Property Developers Question Time. I do a couple of other programs with Property TV. So if you're interested in finding out more about those or just seeing some of the content that we produce, it's very rich in value. I like to think what we try and do with those is deliver as much value to people as we possibly can through the delivery of that content. So if you Google me or Google Melt Homes, that content is easy to find. You can find it via my personal website, which is maindonald.com. I'm also very active on social media, Facebook, Instagram, LinkedIn. Just look me up and you'll find me. Blog posts on our website, and we'll be launching a podcast fairly soon. So I wanted to talk a little bit about how I got started with property development. So we're doing some quite big projects at the moment, but I think it's very easy for people to think the size of the stuff that guy is doing is just at a scale that it's beyond me, because it's of a size that it's just not relevant to me at the moment. And what I want to underline here is I started off doing small things. I mean, my first property projects were flats that I bought in London that I refurbished and sold. Before that, I'd done effectively a joint venture with this friend of mine in New Zealand. So he was actually leading, I was just acting as an investor, putting some money in behind him. And so the first project that I did in the UK was this. It was a large house with a shop in front of it. And there was a fairly large garden on this house. And what I did is I converted the shop into 2 shops. I converted the house into 2 houses. And then I got planning permission on the plot at the back, which is this area here. Probably easier to see from this is the title plan of the house, to build a large semi-detached house on that. And then what I did is I sold the whole lot. The thing that is interesting for me about this project is that if I hadn't got planning permission on that plot at the back, I wouldn't have made any money out of it. So, I entered into this project with a lot of ambition and drive. It was the first project that I'd done, really not knowing a great deal. It was very difficult for me to get development finance. I had to work very hard to convince a bank to back me on this. But I did manage to get that development finance secured, and the project actually ultimately ended up going very well. So I did make some money out of it, but only because I got that planning gain on the plot at the back. And ironically, probably what I could have done is simply just sectioned the plot off, got planning permission on the plot, and then resold the whole thing. And I probably would have made just about as much money as if I'd spent 6 months, as if I hadn't spent 6 months refurbishing and converting the property. But the thing that I did learn, that I did get out of that project, was experience. And so what that enabled me to do is 2 things. It gave me a base of experience to go on and start doing other bigger projects. but it also gave me a track record with a development funder. And so what I was then able to do was to go on and do this project. So I did this project, and this was quite a large leap from that small refurbishment. And okay, I'd been doing some other little bits and pieces in between, and we'll come to those in a minute. But I did this as a joint venture with a builder. And so the reason that I did it as a joint venture with a builder is I was conscious that I didn't have the depth of experience required to deliver a project like this on my own. As it turned out, neither did he. And so actually, he knew, I think, probably 80% of what we needed to do to deliver the project. I maybe knew another 10%, but there was a bunch of stuff that he had never come across and that I had never come across that we had to deal with. And so I think one of the things that it taught me is that builders don't understand how to do property development, architects don't understand how to do property development, structural engineers don't understand how to do property development. Development financiers understand it probably better than most, but brokers certainly don't. Estate agents don't understand how to do it. And so the thing that it really taught me is that the job of a developer is to take all of those different disciplines and pull them together, see the whole thing from end to end and make it work. And what it also taught me is that just because somebody tells you that there's a particular approach to a thing, doesn't necessarily mean that that's the right answer. It just means that that's the answer within the extent of their knowledge. So many of the things that we did along the way in this project didn't actually turn out to be the right approach to take. But again, what this gave me is it gave me a platform of learning that I could use to go on and do other projects. So this was the site just not long after we bought it. We're putting up the first timber frame. This was the site when we'd put up the first 4 houses in timber frame. That was the show home, the first 2 plots 1 and 2. And that was the site when it was finished. And actually, when the site was finished, it was actually a development that I'm really proud of. We did a good job of it, but we didn't make a lot of money. And we didn't make a lot of money because we made a little bit of money, but we didn't make a lot of money because what we hadn't understood were the things that we do understand now about how the development process works. So I then went on to do a number of other projects. So I'll run through these very quickly. This is a project in another place in Gloucestershire, in Cinderford. The thing that I like about this project, and that I'd say when I'm talking about it, is that I took the worst building in the street and turned it arguably into the best building in the street. This project I did after doing the Lord's Gate project, and it went perfectly. And the reason is that I took all of those things that I'd learned on doing that 11-house development, and I planned this with military rigour. And so I guess you could say that the thing that's clear to me is that actually experience counts a great deal in development, because there's an enormous amount of detail involved in the development process. And I'll talk a little bit more about that later in the presentation. So just running quickly through a few other things that we did after that. This was a bakery conversion. A former bakery converted that into 7 flats, and we built 3 new build houses on this site as well. We then did a commercial conversion in Fulham. This was actually in 2009, so this was a conversion of a former commercial premises into 3 flats. That development went very well, but the market wasn't particularly good at that time. So again, you know, those previous 2 projects we did pretty well on. This one we did okay on, but not because we didn't know what we were doing in terms of the conversion. It was because it was a very difficult market at the time. So I then had bought this place in 2006. I got planning consent on it in 2007. This is the Lock Warehouse in Gloucester Docks for conversion to 26 flats with 3,000 square feet of commercial space on the ground floor. I think we all know what happened in 2007. And so I was sitting on this building. I had a tenant in it because I guess if I'm in a situation where I've got any level of planning risk, what I tend to do is make sure that I've got something that will pay for the cost of holding a site while I'm sitting on it. And so I ended up sitting on this building through the global financial crisis and started the conversion of it in 2011. It wasn't really until then that we could get development finance to do the conversion. That's the building partway through the conversion, and that's the building when it was finished. So we finished this in 2013. Pre-sold 50% of those units. That is pretty good going in the Gloucester market in 2013 because it wasn't it? London was really kind of back and starting to roar again then, but in Gloucestershire things were still pretty quiet. So we still own a few flats in that building. This is another project that we have recently completed. It's called 162 in Hythe in Kent. That's the site when we bought it. That's the site when the foundation went in. So the works on the site were about £1 million. By the time we got to there, we'd spent about 400,000. So it doesn't look like a lot for £400,000, but there's piling and all of the groundwork and foundation was very expensive on the site. That was the building almost finished, and that's what it looks like now. So coming on to secrets of successful development. I already said earlier, development is difficult, but I think also development is detail. There are an enormous number of things that you need to know when you're doing a development, and the larger the development, the more things there are that you'll come across that you don't know. And so I think if you're starting to get into development and you're starting to do development on a larger scale, one of the best things that you could do is team up with somebody that's done it already. And so that somebody could be a builder, but you've got to recognise that a builder will only understand the building piece of it. It could be somebody else who has, it could be a lender or an architect. Also, when I say a lender, I mean somebody that's worked in property development finance. But what you need to do is recognise the limitations of the people that you're working with and understand that actually what you need is knowledge of that end-to-end process, all of the components that are required. And so I think the best, if you are going to team up with somebody to do development, the best person to team up with is somebody who's done a development of that sort of size before. It's very important because a small mistake on a large development like this can cost a lot of money. And actually, I think one of the things that I did learn, and one of the things that really came home to me with that Lord's Gate project, the 11 house development, is it's a lot more expensive to fix problems if you're halfway through a development. So if you just bought the site, all you've got is the cost of financing the site. If you're halfway through the development, you've spent half of the money that it costs you to actually develop the thing out. So at that point, you don't have anything that you can sell. You've got a half-completed project, but you've got the interest on all of the works as well as the cost of the site itself. So if you have a delay halfway through that project, a 2 or 3 month delay, it's going to be very expensive because you owe a lot of money to the bank. And so actually, it's better to deal with all of the issues that you can or that you know about up front. And so one of the things that I like to say about development is that planning and preparation is key. It's better to wait and be patient and deal with everything up front than just rush to get on site. I think the instinct for me with the Lord's Gate project was to get on site and start doing things quickly. Actually, as it turned out, if we hadn't got on site and started doing things so quickly, we actually could have made more money out of the project. And that is because the site actually had lots of potential for enhancement that we didn't actually unlock before we started work on site. And so this enhancement thing is something that we now do focus on when we're doing development. And I'm going to give you a couple of practical examples of how that works. I like to say 90% of the work is done before you start on site. I guess that extra 10% should be the things that you don't know about or things that come up during the course of works. But also think slowly, act quickly. So we put a lot of thought into what we do with our development sites. We think it through in a lot of detail. Once we've got that planned and prepared, then we execute it as quickly as we can. So another, I think, key insight for me with development is that everyone always thinks their property is worth more than it is. And so what I mean when I say this is that when a site first comes to market or a property first comes to market, usually the vendor will ask as much as they think they can possibly get for it. So when I'm looking for development sites, one of the things that ticks the box for me is if the property's been hanging around for a while. I think usually vendors are not in a mood to negotiate when they've just put their property on the market. And so generally, if I know that something's just been released, I normally won't look at it because I'm not in a hurry. What I like to do is I like to buy well when I'm buying development sites. And so I tend to look for stuff which has A, been hanging around for a while, but B, which has maybe some problem or issue with it. So often the case is that straightforward sites sell quickly, so sites that are easy are likely to get snapped up by somebody else quite quickly, and you can find that there's quite a bit of competition for those sites, and what that means is that potentially you can end up overpaying. If you're competing with other people to buy something, then you're not necessarily going to get a bargain. What is often the case is that you find with sites that are difficult or that have some sort of problem is that problem puts other people off. And so if you can find a solution to that problem that nobody else has seen, or you can see an opportunity in that site that nobody else has perceived, then what that means is that you have the opportunity to buy it at ultimately less than market value. And so I like sites that are difficult because I'm a specialist in finding ways to solve problems or unlocking opportunities with sites. And that really is for me, is the key to extracting value from property development projects. So it's about seeing something that somebody else has missed. And just one final point here before I go on to some examples of seeing that something that somebody else has missed or dealing with problems. Do your due diligence. Make sure that you link reward with risk. So I think a good example of this is understand the degree to which something can be a problem before you jump into buying a site. One good example of this is our Gloucester site. This is the site that we're developing at the moment. Before we bought this site, there were a couple of planning conditions. One was related to archaeology, sorry, it was just one planning condition that we were concerned about. But there was one related to archaeology. So we knew that if there was some archaeology under the site, it would cost us a lot of money, or we'd end up with a lot of delay. So in other words, if there happened to be a Roman villa under the site, it would be essentially undevelopable or very expensive to develop. So before we exchanged contracts on the site, we got an archaeological firm to go in and do an archaeological survey. And what we also did is we got a geotechnical firm to go in and do some ground test reports, because we knew that the two things that could end up costing us money on that site would be if some archaeology was found underneath it, or if it proved that the ground wouldn't support the foundation types that we were planning to build. In other words, if the foundations ended up being very expensive because the ground was soft. Now, we ended up spending about £10,000 on those reports before we exchanged contracts, but I would much rather, and if we hadn't exchanged contracts, then obviously that would have been money wasted. But I would much rather spend that money, or throw that money away if I had to, and not end up with a site in which I had a risk or an issue, than spend the money, which I'd have to spend anyway after buying the site to deal with those issues, and then find out that I had a major problem. So I think when I talk about rigorous risk management, it's about making sure that you understand the magnitude of or the impact that a potential problem can have, and we knew that those could have really been showstoppers for that particular site, so we spent a bit of money on them up front. So just jumping on to an example of a site that we're developing at the moment. This is our site in Gloucester, in Tuffley. When we bought the site, it had outline planning for the construction of 12 houses, well actually it was 10 new built houses, and the conversion of this building, which is a former school building, into 2 large semi-detached units. So when we saw the site for sale, there were a couple of things about it that immediately became clear to us. I just want to ask you, looking at that site, if you can see, and Steve, you're not allowed to say anything, if you can see any opportunities on this site which haven't been taken advantage of.
Too many trees.
There's a lot of trees, so it's worth saying that these large trees have tree protection orders on them. So yeah, there's a lot of trees. But so the point is that trees with TPOs can't be removed without a specific consent.
Sorry, you're looking for faults, or you're looking for something to enhance the value?
No, I'm looking for things, opportunities to enhance the value of the site. So opportunities here. Any thoughts?
I'd probably remove the property that was going to be converted and put extra units in there.
So it's a good idea, and we did think of that, but it's locally listed, and the council's heritage officer didn't like the idea of that, so we did have to keep that.
Restricted access?
And it's not too much of a problem. This is a relatively main road. I think we're okay with access. So this is the main entrance to the site here. Any other thoughts? Come on. Okay, I'll take you out of your suspense. So the first thing that became clear to us when we looked at this consent is the total consented floor space here is 12,500 square feet. So this is an outline planning consent. This school building is 3,000 square feet. So you've got 2 large semi-detached units in a school building. And so clearly there isn't going to be much of a market for 1,700 square feet semi-detached units. And so the other thing that was quite obvious is if you knock off that school building, which is 3,000 square feet, you end up with about 9,000 square feet. So if you divide that between 10 houses, you end up with houses that are about 900 square feet each. Now, those aren't very big houses. A 900 square foot house is a 3-bed semi-detached house. And so it was quite obvious to us that this site could accommodate much larger houses than those that were envisaged under the consent. You can see that house is particularly small. They're all drawn quite small on the plan. So what we did is we submitted a reserve matters application. So a reserve matters application is a way of converting a outline consent into a detailed consent. So in other words, one that you can build. And so with this outline consent, we achieved those 10 houses and we retained the conversion of the school building into 2 large flats or 2 large semi-detached units. But with that outline consent, we ended up with 18,500 square feet. So we paid £725,000 for the site. This consent, simply by putting larger houses in under a reserve matters application, valued the site at 1.1 million. So we achieved quite a significant planning gain simply by taking the reserve matters, by recognising that the outline consent actually understated the amount of accommodation that could be achieved on the site, and putting a reserve matters application in which actually optimised or maximised. I mean, maybe we could have gone bigger, but certainly that was a pretty significant uplift on the original consent. So what we then did is we put in a further planning application to convert the school building into 7 flats instead of 2 large semi-detached units. So put an extra floor in there, and so clearly that was a significant addition of floor space. What we also did is we came to an agreement with the Council's Arboricultural Officer to remove this tree, TPO protected tree, in return for a £20,000 contribution towards tree planting elsewhere in Gloucestershire. And as a result of that, we were able to accommodate 2 additional houses here and here. So those 2 additional plots are worth about £80,000 each. So clearly that would more than pay for the cost of removing the tree. We did look at whether or not we could actually move the tree. It would have taken, I think, 3 years because there's a preparation process, and it would have cost about £200,000. So that wasn't particularly economically viable. I mean, these 2 additional houses were obviously reliant on getting the Council's Arboricultural Officer to have a conversation with us, but they were more than happy to take some money as a contribution towards tree planting elsewhere in the borough, and so that was a win-win for everybody. This planning consent, we ended up with just under 25,000 square feet. We've ended up with a total of 12 houses and 7 flats, and that values the site, or the residual site value based on that, is about 1.35 million. So the original gross development value of this was around about 3.5 million. The gross development value of this is around about 7 million. So in essence, before we even started work on site, simply by focusing on how we could maximise the value of the properties on the site, we delivered a significant increase in the value of the site. That's a CGI of what the project is going to look like when it's finished. And that's it on Lime Grove. So I want to come on to another project that we're doing. This is in Kennington in SW9. It's currently Europcar's depot in southwest London. It includes this property here, which is a residential property, and there's around about 20,000 square feet of commercial space. So this has an existing consent for the construction of 32 units over the existing commercial premises. So we end up with with those 32 residential units plus around 20,000 square feet of commercial space. The current consent is not a particularly well thought through consent. And this is a very different kind of a site. But again, with this site, the first thing that became immediately apparent to us when we started looking at it is that it failed to optimise the value, the potential value of the site. And so the 2 things that were clear to us were that firstly, the floor to ceiling height there didn't necessarily need to be that high and didn't necessarily optimise the use of space within the building, but also this is a site in central London, so you've got ground floor space essentially occupied by car parking. That's not really the highest value use of ground floor space in central London. And so the scheme that we have submitted with a pre-app is essentially adding a basement, pushing the car rental use into the basement, which frees up the ground floor space for higher value commercial use, food retail or office. And it was quite obvious that we could also fit an additional floor within the existing approved envelope, so simply by messing around with the floor to ceiling heights. So this has quite a significant impact on the value of the site. So this was the thing that got us interested in the site in the first place, the fact that the current planning consent was quite lazy, it wasn't very well put together. And so what we then started doing as we were going through our process of due diligence for site acquisition is we started talking to potential commercial operators. And in fact, what we ended up doing before we exchanged contracts on the site is signing a set of heads of terms with a major apart hotel operator, a company called Stay City, to put in a 165-bed apart hotel on the upper floors of the scheme. We've also got subject to planning interest from a number of food retail operators for the ground floor space, and the existing tenant, Europcar, want to stay. They'll take a small office on the ground floor, and they'll put their car parking into the basement. So this is a joint venture with a private equity fund, and we've bought the special purpose vehicle. It's actually an Isle of Man-based company that owns the site. We're paying $8.7 million for that. We exchanged on this in April, and we're due to complete in October. This is the scheme that we've put forward for a pre-app with the planners, and this is the apart hotel scheme. Essentially, we're joining the two elevations with a link between them, and we're also looking to get an additional story on top of the front and rear elevations or I should say really on both sides of the site, that's set back from the front elevation so you can't see it. So the argument here with the planners is if you can't see it, then it's not there. And so what we're looking to do with this is to maximise the amount of floor space within the site and thus maximise the value of the site. So this is the front CGI of the proposed scheme. So there's that extra story. You can't actually see it from the ground at that level. We actually used VR with the planners to demonstrate that. So you can go into the VR system, you can walk around it, and you can see that you can't actually see that story when you walk around it from the street. That's what the front elevation looks like. So that's the piece that's set back from the front elevation. That's a rear CGI of the scheme. So when you look at all of those alternative uses and the additional floor space that can be gained through those additional uses and the replanning of the scheme, you actually end up with a significant impact on the value of the site. And so the consented scheme that we're paying $8.7 million for, gross development value of around $32 million. If we get an optimised residential scheme, so in other words, that extra floor of accommodation, the basement, we maximise the amount of residential space within the scheme, we end up with a gross development value of about $43 million and a site value of about $13.5 million. The hotel consent will give us a residual site value of around about $22 million. So in effect, by messing around with the planning permission and optimising the planning permission, we can significantly enhance the value of the site before we even start work. And so when I talk about design-led development and value enhancement, that's really what I'm talking about. It's about using the experience that we've developed to see opportunities to enhance value before we even start work on site. And so one of the ways that we de-risk development projects is by doing exactly that. By enhancing the value, we create more margin for ourselves in the project, and that makes the project less risky. There's more margin for error. So a couple of key takeaways from this. Look for the opportunity behind every problem. I think that really applies, and I haven't really talked about the problems that exist on the Clapham Road site in a lot of detail. There are a lot of problems with that site and with the consent. It's very poorly put together. But the reason that it's attractive is that it's very poorly put together. It's not well thought through. And therein lies the opportunity. So that might scare a lot of people off. People might look at that and say, well, that's actually a bad planning consent. Why would I want to get involved with that? The reason that you want to get involved is there's a lot of an opportunity to enhance value. And actually, if the planning consent is very poorly put together, then the vendor actually hasn't maximised the value of the site as is. So the other thing is, if it's difficult to work out, it will put other people off. And so there are a number of issues with the planning for that site. There are some right-of-way issues that are difficult to deal with, but they can be addressed through. There are a number of options for addressing them. One is insurance. But those issues with the site put a lot of people off. We were able to actually get our teeth into them, trying to understand what was involved and actually put solutions in place to those problems, but also see the value of the planning upside on the site. Patience is the key. Sometimes the best sites are those which have been hanging around for a long time. I alluded to this earlier, but I think when a site's been on the market for a while, it's usually because there's a problem with it, and it may well be that a site like that, you can find yourself in a position where nobody else is interested in the site, nobody else is bidding on the site, and what that means is that you've got time to actually go and look at it properly, work out the solutions to those problems, and you know that the thing's still going to be hanging around because you're not bidding with 5 other people who are you're in a queue to buy it with. So I think for me, this philosophy of being patient and focusing on sites where you don't have competition and which maybe have just been hanging around a bit is really key. Sites which are newly on the market are usually overpriced. Don't allow yourself to be rushed and pushed. There are lots of things out there. If the deal doesn't work, walk away from it. And I think one philosophy that you can employ with this is if you know that a site is only worth a certain amount to you and the vendor is asking a lot more for it, simply put your best offer in and say, okay, well, that's what I'm willing to pay. If you're interested, come back. And some of them do, because at the end of the day, if nobody can make money on a site, then either the chances are it won't be sold, but if somebody does buy it, then they're not going to, and either they've seen something that you haven't seen, or they're not going to make any money on it. Think slowly but act quickly. So I think this really ties in with don't allow yourself to be rushed or pushed. Just take your time. If it doesn't feel right, move on and do something else. And just look for the things which everyone else has missed, I think, because in those things, there's value. So that's really the main piece of my presentation. I just want to talk a little bit about if you wanted to get involved with Melt Homes or find out a bit more about us or get involved with our projects, there's a few ways in which you can do that. We've recently launched a bond. This bond is secured against property. It's not a corporate-backed bond. It's secured against our investment property portfolio, so it's with a second charge. And people who invest in the bond get priority access to future equity investment offers, and so we launch equity investment offers reasonably frequently. Those generally offer 24 to 28% return per annum. Investors get an enhanced rate of return on any equity investment projects that they move money into. So the money goes into the bond and it can be moved into future equity investment offers. We offer a 10% return during the period that funds are held in the bond. We're raising a total of £500,000 with that bond. We've already raised over £300,000. If you're interested in finding out more about that, go to our website or talk to Grace or Bhavika, who are over here, just part of my team. If you're interested in seeing what we do, we also do investor site tours. So again, have a chat to Grace or Bhavika if you want to sign yourself up for those. The Gloucestershire site might work for some of you guys, but we also do site tours in and around London on our projects there. So just to finish things off, and I'll be on Mastermind table afterwards if any of you have got questions for me or there are things that you want to ask about the projects that I've been talking about, and I'm also happy to take questions after the presentation, by the way. But just kind of a thought to leave you with. We structure our development projects so as to minimise risk and maximise return on capital, but that is not the thing that drives us. We need to deliver profitable developments because otherwise our business wouldn't be sustainable. We couldn't keep doing it if our developments weren't profitable. So for us, that's really the starting point. We need to make them work in that way. But what really drives us is a desire to deliver projects that have an impact on the places that they're built. And how I sum that up is, I say what we stand for is delivering inspiring buildings that make a positive impact on the places they're built in and which contain living spaces which are designed around the way people live their lives. I think the best way that I can sum this up is to say that when I stand back and I look at a project that I've delivered that has an impact on the location that it's built in, and the Lockwarehouse in Gloucester Docks is one of those projects that I am very proud of, and I see people using that space, and I see the impact that has on people's lives, but also on the place that development has been done. I get a real sense of satisfaction from that, and so that kind of desire to improve places and deliver things that leave a mark on the world is really what drives me to do what I do. So thank you for listening. Happy to take any questions.